So the Federal Reserve is about to pump crypto and stocks. You may not believe me, but I'm going to show you solid evidence today. Solid evidence today of why and how the Fed is going to pump crypto and stocks. They're going to deny it. They're going to be hardline. They're going to say no rate cuts, no rate cuts. And they're going to basically be like, we're not doing any QE until interest rates go to zero. And we're nowhere near that right now because interest rates is at 4.5%, 4.25% right now. So until it goes to zero, we're not going to do QE. But there is such a thing as stealth QE, or people make fun of it and they call it not QE. QE means they're so ashamed of it, they don't want to call it QE, but in effect, the natural effect of what they're doing is QE. That's when the Federal Reserve is using printed dollars to buy the bonds off the market, right? Whoever is selling them, the banks, the US government, whoever it is, and that injects a lot of US dollars or liquidity into the markets. And that's what makes Bitcoin and crypto pump a lot as well, right? So basically the situation we've had over the last 24 hours is that we have seen Bitcoin pop up a little, right? It's basically swinging between this 93 area, almost got down to 92, and 97 area, right? Basically take out the longs, take out the shorts. But this one wasn't so much market manipulation, although I do think they were trying to take out the shorts here. What it is, is actually basically, we just got news that the trade deal could be coming together. Well, basically, U.S. Secretary of Treasury Scott Bessent just announced that he's going to be talking to the Chinese team on Saturday. And that's obviously huge news. As I've been saying, guys, the Federal Reserve is not going to be willing to cut rates or do QE or even end QT, which is quantitative tightening, until Trump walks back majority of his tariffs. Because those tariffs, like, they would just at minimum, not even the Chinese ones, like the ones against Vietnam, Europe, Australia, they would just push up prices by 10% on everything that's imported into the US, minimum. So basically, when it hits the shelves, it's going to go up 10% at minimum. When it hits the manufacturers, that increased their cost 10% minimum. So inflation is coming in that case, and the Federal Reserve is right to be worried about it. But however, I do say that they're going to be forced to QE even if they don't want to, and that's going to pump Bitcoin and crypto. What do I mean by that? Now, before we get to that question, let's first answer the question of which crypto exchange does Pablo Jimenez use? Well, Pablo uses the exchange that is non-KYC. That means no ID is needed. That means even the exchange can't see who you are. So that means the IRS can't see you, tax office can't see you, CIA, FBI, nobody can see that it is you. So I made this deal with Bitunix, Pablo Jimenez link only, deposit and get up to $200 US, right? And trade and win up to $35,000 US, and basically, right, chance to win a Tesla Model 3 or Rolex, Apple Vision Pro, Sony, PlayStation, etc., etc. But remember, end date is June 4th for a limited time only. So if you're watching it on YouTube, then this link is in the description below. The link is in the description below. But if you're watching this on another platform, such as this one, then basically just click on my profile page and then click on my Sten link there, right? And it should be the first deal that pops up because this is a great deal for everyone, right? Bitunix right there. Okay, let's get back to the markets. And remember, folks, this is on the Pablo Jimenez link only. Okay, so with Bitcoin, right now, my thinking is still we retest this 91.7, 92K area with a flush down, wick down to possibly around 88.5K area, as low as that. It might even close, not be a wick, but might even close for a day down here or two and freak everyone out. And then everyone's like, oh my God, that was the top, 109K was the top. We have a lower low, lower high, lower low, right? When it gets here, everyone's going to panic and you know, think the bear market has come. My thinking is I'm going to do some buying once we retest this area. I've already got enough coins. If I miss out on this buy, the dip moment, I'm fine with that as well. So, you know, markets is full of uncertainty. So I'm not trying to be like 100% must get it right, buy the dip, must get it exactly right. I don't need to do that. So, okay, so let's have a look at why I think QE is coming. So here's a very important chart I'm going to show you guys. This is basically the last two treasury auctions, and the results have been terrible. I mean, last month the treasury auction. This is from the U.S. From the U.S. Treasury Department. For the 3-year treasury auction was pretty bad. For the 10-year was bad as well. So essentially, the numbers we're looking at have been circled out. This is the SOMA. This item called SOMA, and basically we can see that in total they want to raise $109 billion. They want to sell $109 billion of US 3-year bonds, right? They had primary dealers, direct bidders, indirect bidders, right? Primary dealers basically means it's the banks. They're the major, like JP Morgan, these Goldman Sachs. These are the guys who deal that paper to clients. And then direct bidders are like major buyers of this, like say China or Japan or EU could be the direct bidders. Indirect bidders are basically like other smaller banks who buy it on behalf of their retail clients. Like if your parents are buying bonds, they're probably, going to buy some through like a smaller bank, what would be a smaller bank in the US? Whatever it is, that would be an indirect bidder. But who bought 14.8 billion of this item called SOMA? Actually, I will correct myself. This was actually the 10-year treasury sale, 10-year note, right? 10-year note. Someone bought 14 billion out of this 109 billion. The other one I want to look at is this one. This is a 3-year auction, and in total, there was 148 billion been sold, but someone bought $20.4 billion of that. $20.4 billion for a total of 168 billion. Who was that? Who did that buying? So SOMA basically, if you were to Google it, SOMA points to the Federal Reserve buying. So this is what I mean by stealth QE. Of course, the Federal Reserve hasn't started the QE. They haven't even ended the QT yet. But then if the net effect is that you have increased the amount of liquidity in the world, in the US banking system, by buying US bonds, even though you say we haven't ended the QT yet, we haven't started any real QE program, the effect, the end result is the same, right? For people who don't understand this, for people who think high finance is too complicated, I'm going to give you, in 2 sentences, I could explain this to you in a very short example, and you get what I'm saying. So it's kind of like, imagine a husband or a boyfriend with a long-term relationship goes and sleeps as a hooker, and he gets caught red-handed, and the wife or girlfriend barges in and says, so, you're obviously sleeping with her, right? You nailed her, right? And he's like, he's got his pants down, he's like looking at the hooker, she's naked in bed, and he's like, I don't love her, I love you, I don't love her. And the wife says, the girlfriend says, I didn't ask if you love me or not. You obviously slept with her. You nailed her, right? And then he says, look, I don't love her, but yeah, I nailed her. And that's what the Federal Reserve is doing. They're saying, look, I'm not doing a QE program, but yeah, I bought some bonds. Who cares? What difference does it make? You bought a lot of bonds and you injected in 2 days, Monday and Tuesday. Oh, by the way, right now, I'm doing this like about 3 hours before the Federal Reserve announces their results, announce their FOMC meeting results. So I don't know if they've cut interest rates or not. My prediction here is they'll probably keep interest rates steady. They probably don't have, I'd be highly surprised if they announce an end date to QT at this stage because of fear of Trump tariffs. But I am saying in the next few weeks, we're going to see a lot of QE or printing of US dollars coming. And I'm trying to explain to you guys the reason why. So it's kind of like that, right? The Federal Reserve is acting like that guy who's been caught red-handed. They're saying we're not doing any QE, we're not printing money, we're not stimulating the US economy, we haven't even ended QT yet, right? But the net effect, who cares about all that explanation? I don't care about words, I care about your actions. The actions they have done is that they've now actually gone on and printed money, using printed money to buy $40 billion worth, no, $35 billion worth of US government treasury bonds in just 2 days, Monday and Tuesday. And now I'm waiting for the Wednesday US FOMC meeting results. So this, if you don't understand it, like I said, it's like a guy saying to his wife when he's caught with a hooker, he says, oh, look, I don't love her, but yeah, I slept with her, but it doesn't mean I love her. And to the wife, she's just thinking, well, who cares, right? You slept with another woman, right? This is you've done the deed. Who cares if you say you love her or not, right? So it's still called cheating. So basically, the Federal Reserve, doesn't matter how they explain this, it's still called QE. But however, a lot of Wall Street pros who they like to say, people who say that are dumb, people who say that are foolish, and they'll say this, because they'll say, you don't understand what SOMA means. SOMA, okay, today's Fed meeting, SOMA, is called FOMC. That stands for Federal Open Market Committee. That O and M, FOMC, and SOMA, SOMA, also stands for open market, right? What it means is that basically the Fed is buying these bonds. But there's a caveat to it that people on Wall Street will argue against. What happens is these bonds are actually not bought by the Fed in an open market competitive bid situation like in QE. What happens is the Federal Reserve is just reinvesting or rolling that debt. What happens is 3 years ago, the Federal Reserve bought $20 billion of these bonds. And today, they're due. So the Federal Reserve would say, okay, here's my bond certificate. I'll give that back to you. You give me $3 billion. You give me $20 billion of money. Right? So therefore, that's called QT. The Federal Reserve would take $20 billion out of the market. And there will be $20 billion less liquidity in the market. But instead, what the Federal Reserve did was this. It says, these are my 3-year treasury bonds. They're due. And I could ask you for my $20 billion back. But instead of asking you for $20 billion and taking it out of the banking system, what I'm going to do is, okay, this is now, I'm going to roll this and just give me your new 3-year treasury bonds. We'll put these away and you give me these new ones. So I'm lending you $20 billion for another 3 years. You keep that $3 billion. You keep that $20 billion. I'll ask you in 3 years' time when it is due. That's essentially what happened. And people on Wall Street want to get technical and they want to say, oh, the Federal Reserve didn't really buy those bonds. It's basically like, if you want to be childish about it, it's basically like, okay, here's your bond certificate. Give me $20 billion. We wait for like 10 seconds. I have $20 billion with me now. Oh, I want to buy your new $20 billion 3-year bonds. So here, give you $20 billion back, and you give me a new certificate for another 3 years. So from 2025, May the 6th to May the 6th, 2028. That's the only difference. So I don't want to get into too technical, but they could say that this was there were too many bonds that was maturing. There was the Fed didn't want to do that much QT. Therefore, they let some of the bonds roll off, but kept on rolling some of the other bonds. Now, I think that's very sus because this is happening at a time where, let me show you guys, where we will know actually by Thursday. Right now is only Wednesday morning US time. This is the US asset balance sheet. This is when the Fed is printing dollars. This is when they're doing quantitative tightening, QT, and taking money out of the system. And this number is updated every Thursday. So, well, it's Thursday morning. So they tell you what the Wednesday numbers were. So by Thursday morning US, that's tomorrow, we will see if this number compared to last Wednesday, it was $6.71 trillion, if this number ticks up or not. If it starts ticking up, right? They can say they're not doing QE as all they want, but that's actually QE. So that's the number we need to watch out for. And the reason why I'm bullish on Bitcoin and crypto and stocks in the next few days, few weeks coming up, is that because in the coming weeks, I've said to you guys many times in my Discord and on social media, there's something like 6.5 trillion US dollars of US Treasury debt that is coming due. And usually they would, by now, they would start asking like the biggest buyers, China, Japan, Europe, Saudi Arabia, and then the biggest banks like JP Morgan, Goldman Sachs. Are you guys going to buy some? What can I have you down for? 100 billion from China, 80 billion from Japan. Okay, that's how they stack up their buying order. But however, this time, because of the trade war, China's obviously not going to buy any. If anything, they're going to not sell, but just let maturities roll off. Japan has been selling already, not buying, selling. And Japan's the largest holder right now, foreign holder right now. And they've actually threatened the United States, which is quite unbelievable, considering Japan has 120 US military bases on it, that they'll use these selling of these treasury bonds as a card to play against the US. So I don't know how they're going to be able to sell $6.5 trillion of US Treasury bonds in a moment like this. So the only solution I see to it all is if basically the Federal Reserve steps in. It's going to have to step in and start buying some, or else we're going to see this chart, US 10-year Treasury yield spike up. If no one's buying, then price crashes. Price crashes, and then the yield jumps up to like 4.5, 5%, 4.5 or 5%, something like that. And that's really bad, like 5%, because it means you eventually, you can sell the bonds, but you're going to have to sell it cheaply. Not sell it at the price you want, but sell it much cheaper. You get the money, but when the prices go down, the yields go up. And then essentially it means United States is borrowing money at very high rates, like 4.5, 5%. Could even go to 5.5%, 6%. That's kind of like, how when you borrow money at a very high interest rate, that's called loan sharking. They call it that. So US could run into that situation. So what I'm saying is, for the sake of saving the US Treasury, saving the US dollar, I think the Federal Reserve is going to have to come in and take maybe 10% of those bonds, or 20, 30, 40% of those bonds. We're talking $6.5 trillion, not a billion, $1 trillion. That's 1,000 billion, it's a trillion. So when that happens, I don't care what you say about not QE, no QE, that is going to be called QE in anyone's books, right? Okay, so I'll keep you guys developed if QE happens, and then ETH, Bitcoin, stocks, and altcoins should take off. Gold as well. Thank you for watching. Catch you for next